All right, so in this video, I'm going to be talking about 3 different research papers that I found that all covers how to use LLMs in terms of predicting the futures in relation to the prediction markets. So the first one here is, do large language models know what they don't know? And then we have wisdom of Silicon Crowd and LLM Ensemble prediction. And then we have AIA forecaster technical report. So those are the 3 reports that I'm going to go through. I'm going to go through it kind of briefly and then talk about how we can take this information and design a automated trading bot based off this research. So as most of you probably already know, prediction markets works in such a way that the price of the token reflects what the crowd thinks the probability of that event is. So what these papers are kind of trying to look into is, can we use LLM, large language models, to better predict the future or these event outcomes better than what the crowds can do? Because what we've seen so far is the crowds from these prediction markets has tended to predict the future better than normal polls. We've seen that in the US presidential elections and other areas. And I'm going to talk about this in 3 different levels. So the first level of these 3 levels is to simply just ask the LLM, ChatGPT or Claude, given a certain market, what it would predict the outcome to be, 50%, 80%. So we simply just prompt it. And then we're also asking it how big of a confidence it has from 0 to 100%. And this is going to be a little bit important later in the paper, because this is also something that this paper talks about. So if we go over to the results, so what he actually looked at is simply just making a single prompt to the LLM, asking it for its probability and its confidence. So the main results, table 4 presents comprehensive results across all models and metrics. So key finding 1, systematic overconfidence. All models exhibit substantial calibration errors, with ECE ranging from 0.12 to 3.95. Even the best calibrated models shows a 12% average gap between confidence and accuracy. And then the key finding 2 here, most models fail to beat the base rate. Only Claude Opus 4.5 achieves a positive BRIA score 0.057, indicating it marginally outperformed simply predicting the 40% base rate. All other models have negative BSS, meaning the probability estimates are worse than uninformed guessing. Okay, so basically using an LLM as it is in most cases just going to outperform just randomly guessing. Okay, so this paper from Bridgewater AIA Labs has also done some research. So what these guys here found was hedging behavior from the LLM. So basically, if the LLM is, pretty confident about something, it's going to try to hedge towards the middle of 50%. So say let's say that the model is actually 80% confident that its answer is correct. It's going to try to say 60% or 70%. So here's an example of hedging behavior with this question. Will the total return of the ISPO for US corporate index, which tracks the performance of corporate debt issued in the US domestic market, have increased by this date as compared to its value on this date? Okay, so it actually heads down from 0.62 to 0.6, not that much, but still a little bit. And then down here, and here it comes with basically suggesting a 99% change, but then we shave the probability from 98 to 97. Okay, so actually it said 98, but we then shave it down to 97. So again, it kind of hedges towards the middle. It basically gives a lower, probability than what it actually thinks. These findings is also going to be a little bit important later when we talk about the Platt scaling. Now, this was level 1, and then we're going to have a level 2 of a multi-model ensemble. Okay, so we have this paper here, wisdom of the Silicon Crowd, LLM ensemble prediction capabilities rival human crowd accuracy. Okay, so human crowd accuracy is basically Kalshi, Polymarket. This is where the real lifetime predictions, is displayed by the human crowd accuracy. So this paper here basically looks into what if we can use multiple LLMs together to sort of predict kind of the future, right? And predict these events. So if you go down here to the discussion section, it actually write it pretty clearly here. Our results show that LLM prediction capabilities can rival the gold standard of the human crowd tournament method if they themselves draw on what we call the wisdom of the Silicon crowd. And here in the paper, they actually outline how they do it. So they have the forecast input, the background resolution criteria, question text. They then pass that into each of the different models. And then they have a median forecast calculation, and then median LLM crowd forecast. So they basically do a median of all their different predictions. Now in this paper here, the AIA forecaster technical report, if you go to section, I believe it was 7, what they look at here is actually the ensemble size. So how many LLMs do they use to do these forecasts, and then how accurate are they? You can see how if you just have a single LLM, its capability as predicting the market is very, very poor. The more you get, the better, but then it kind of steeps off around here. So the sort of the gold ratio of the amount of LLMs is around, it's around 5, 6, 7, around this area here. And the more you get, it doesn't really do anything, especially around the 10. You don't really get much benefit of using more models. So the conclusion here is, 1 is very bad. 20 is not necessary. Sort of the gold standard here is probably 5 to 10 models. And then in addition to this, there's actually an open source project that I'm going to link to down in the description. And do keep in mind, I did not read this code through. I don't know if this is secure. I'm just going to talk about one open source project here that actually uses this idea, but in a little bit different way. So this is the Kalshi AI trading bot. This is a multi-model AI ensemble powered by OpenRouter. So this is what we just talked about, an AI ensemble, a group of several different AI models that sort of together try to predict the markets. And if you go down here, it basically describes how it works. So you can see how we have here they pass in different data to the different models. Okay, so that's the 5 model ensemble, which is, I would say, probably the minimum amount of models if we look at the paper before. And then they have here Claude, Sonnet 4.5, they have the Gemini, they have GPT, DeepSeek, and then Grok. Now the difference here is they actually add roles to the different models, and then also a weight. So they have here lead analyst 30%, they have forecaster 30%, risk manager 20%, bull case 10%, bear case 10%. Okay, and then they basically just do an average of that, and based on different criteria, it's gonna execute the trade. It's pretty simple, but this is a little bit different from what the papers talked about, where the papers, they use the same prompt, and they don't use any roles like they do here, and then they get and basically an average of the predictions. Okay, so there's a little bit different, but it is an interesting case here which we could look into. But again, keep in mind, like we saw in the papers, this does not beat the crowd. So you cannot use this to actually beat the crowd. This is exactly what they said in the papers. We need something more, and I'm going to talk about, which is the level 3. And for level 3, we're actually going to go back to this paper, the AIA forecasted technical report here, because they actually have a sort of a system to take this one level up. And it is actually here, so 3.2, the AIA forecaster. Okay, so it have some different components. Okay, so first it receives a question similar to what we saw before in the different papers. It spins up multiple agents, so that's the ensemble of AI agents. Okay, now here's the big part. It searches for information. Okay, so this is actually where it has agentic search. So it actually searches for relevant and recent data. After it searches, it then does an initial forecast. It does some kind of a custom calibration And then 6, it reconciled individual forecasts. And you can see here, so when all the different LLMs have done their forecast, maybe some of them will disagree. So say agent 2 and 7 disagree on how strong the legal obstacles are. Why? And this is actually where you have sort of a supervised agent and then tries to reconcile these disagreements. And then eventually it's going to calibrate the final forecast. And the calibration is what we talked about before. So to explain Platt scaling, we can refer to Claude here. So Platt scaling is just a function that stretches probabilities away from 50%. So this is related to what we just talked about before, where these LLMs have a hedging bias. So it want to hedge towards 50%. But then this formula here actually takes it away from 50%. The intuition LLMs hedge, they take prediction that should be 85 and say 65 because they want to sound careful. Platt scaling reverses that. It takes the hedged number and pushes it towards where it probably should have been. Say the LLM set a probability of 0.6. The Platt scaling will actually make it out to 0.657. And in this case here, 0.75 would actually become 0.858. Okay, so now the last piece of the puzzle, and I'm gonna wrap this up after this, is this table here. So table 7 in the AIA forecaster technical report. So we have this table here, the performance of a simplex constrained regression ensemble, which combines LLM forecasts with the market price. So here they take the forecasts of the LLMs that we just discussed, and they actually blend it with the market price, because the market price is already what the crowd thinks the probability of an event is. So if you take what the LLM think, and if you take what the crowd thinks and combine that with some kind of a weight, that's kind of your final answer. All right, now let's bring this a little bit back down to earth. I know we've talked about a lot of theory, a lot of ideas in these different papers and this open source project. And here is sort of a diagram of how could we actually construct a strategy based on everything we just talked about. And again, keep in mind, this is just an idea. If it's actually going to be profitable, we don't know. It's something we can test out with Raven eventually. So it's going to run like this. We start by pulling the market price and the question from the prediction market. It could be Kalshi, it could be Polymarket. Okay, so for example, 0.65 cents. Now, here we have the parallel agents with agentic search. So this is very important that they are actually able to do agentic search so we can get real-time sort of data. So each agent searches independently, follows chains of evidence. So agent 1, and of course, each agent is also its own model. It could be ChatGPT, it could be Claude, it could be Gemini, and so on and so forth. And then again, as we also saw in the paper, we probably want to have a minimum of 4 to 5, ideally up to 10 agents. So I think a good baseline is probably around 4 to 5. Each agent then decides what to search and can follow up adaptively, like a human researcher, not the fixed query. So after they kind of run for some time, they return a probability. So for example, the market, so that the crowd thinks the probability is 0.65, and each of the agents come with their own probabilities, 0.58, 0.52, 0.71, and so on and so forth. And then we get a simple mean. Okay, so that's sort of the average, the mean average of all the different forecasts of the agents. And then with the third step, here's the supervisor agent, and then reads all reasoning traces and identifies disagreements. So again, remember that all of these has this sort of chain of evidence. So if this supervisor agent sees that, say, agent 1 and agent 3 disagrees with some areas, it's actually then going to do a targeted search and fact check claims. And then there will be a revised forecast if there's a high confidence. Only override simple mean when it finds concrete evidence. Okay, so here it's then going to return that probability. And then, as we talked about the Platt scale, so again, LLMs have a tendency to hedge towards 0.50. So this is actually where we can apply this Platt scale, okay? So this one might return, so it might get 0.54, but then return 0.57. So it's going to increase it a little bit. And then the last thing we talked about just before was blended with the market price. So we got the market price up here. So from the paper we just saw before, they took around 70% weight to the market price, and then about 30% to the LLM's probability, okay? So here it's gonna blend this together, and then the final probability from this system is 0.626. Now, where's the edge then? How can we actually make money on this? This is very like theoretical, right? This is where we look at the gap, and the gap can say that's our edge. So we want a certain edge of our trades. So here's gonna calculate it. So in this case, we have the market's probability is 0.65, and our LLM probability is this 0.626, and then we have a gap of 2.4. If it's less than 5, we're not gonna do any trades. If it's more than 5, you know, that's the edge, 5%, we're gonna do a trade. This is something that might work if you scale this up to a lot of different markets, because it's just gonna keep finding these trades here. So this is an example of how we could actually go about designing a trading system based on all of these agents. And then of course you could, with blending the marketplace, you can also adjust these values. So these values just comes from the paper, and I didn't really go into details about how they derive those values, but it is something that you could tweak in your strategy. And the same goes for the Platt scaling, because here the variable here is A, where you can adjust that value as well. So yeah, I hope that made sense. Of course, if you don't know already, I'm building Raven in public. Raven is a no-code trading bot builder. Think N8N, but for trading bots on prediction markets. If you go to raven.gg, which is this site, you can join the waitlist here for Raven when it launches. Right now we are in alpha, and I expect to launch the beta a little bit later this month. And of course, we also have a free to join Discord community where we have a lot of alpha going on. So we have almost 2,000 members now actually in the Discord here. And it's free to join. It's always going to be free to join. I'm going to make sure to leave an invite link down in the description below. So with that said, hope you're going to have a good one, and see you at the next video. Bye-bye.